welcome back to another cast with Trend Following Tyson. And we'll just pick up where we left off. So we're still in the middle of a very shaky market, a very choppy market. So we're going to be looking to protect our ass, so to speak. We're going to be looking to do some defensive trading and kind of protect some capital at the same time trying to stay in tune with these home runs. Last home run we hit here was TNDM and INTELSAT from $7 to wherever TNDM was at, $24 was the highest point. Okay, so the other home run we hit was HEAR and INTELSAT, both of INTELSAT from $7.50 to roughly $22 was the high, and then HEAR from roughly $8 to $25 or something like that. So, and HEAR is kind of the better stock right now that's holding up the better portion of those gains. So, with that being said, so we're focusing on staying in tune with the next home runs. It doesn't matter how long it takes for them to develop, as long as we're there and we're riding those big moves, riding that wave, so to speak. So, let's get into some more defensive trading so that we can have the right mentality behind this defensive trading and how we should be going about it. I know everyone knows how to trade defensively, but it's important that we look at the aspects of defensive trading from a successful sort of aspect, from someone who's been quite successful in that aspect, and then we kind of take a look at what they thought defensive trading and how they go about defensive trading and how did they build this this substantial amount of wealth and success using trend following techniques and risk management techniques and breakout techniques and such forth. Okay, so let's get into the quote from Bruce Kovner, and then we'll get into the trend picture. Whenever I have a position, I have a predetermined stop. So this is one thing that this is one defensive trading technique right here alone. Okay, if you're a trend follower like me. Okay, let's go to this chart real quick. If you're a trend follower like me and you want to catch this rounding bottom, okay, let's say you enter at 8. All right, let's say you want to enter here when prices came back down here, and you said, all right, I want to enter here, and I'll put a stop. You need to have your stop in with your order. So if you got in at $8, you put your stop down at $7.50. You never, or give it some buffer space, $7.45 to $7.40. And you never got stopped out. Now you're enjoying this move. Now you can trail your stop because you didn't get stopped out. So this is a winning trade. Now it doesn't matter. You don't know how much of a winning trade it's going to be. But according to where it's at now, if you made your entry at 8 and your stop at 7.40, you're still in there and it's a winning trade. So you have to have a predetermined stop. That way when you take your entry to these trends and then, as time goes on, you don't have to worry. Listen to Bruce Kovner. When I enter a position, I have a predetermined stop. That is the only way I can sleep. That way you can sleep at night. I know where I'm getting out before I get in. The position size, okay, here we go. The position size on a trade is determined by the stop. And the stop is determined on a technical basis. He's saying he takes position sizes based on his stop. Okay? And his stop is based on a technical basis. Meaning technically, if we were looking at this entry here, okay, technically speaking, from what this stock's been doing, all right, let's look at the movement here. Up, downtrend. So this stock should be holding these breakout levels, these old support levels. So in this case, this right here, it should be holding inside of this level, 830 for 845. Technically, because if it's going to turn old resistance into support like it's been doing here, okay, like it's been doing most of this chart, if it's going to turn resistance into support, all right, like it's been doing most of this chart, then we need to stop ourselves out below resistance. Okay, basically, technically speaking, and this is like a little trend line, you can basically go from here to here with it. So yeah, and then if you were to line this trend line up, you'd end up here and here. So 845 is technically really would be the stop level for this. All right. Because technically, if we were to pull back, we should at least hold this level here. All right. I never think about stop vulnerability, because the point about a technical barrier, and I've studied the technical aspects of the market for a long time, is that the market shouldn't go there if you're right. All right. So if you're right, the market shouldn't pass your stop. All right. The market shouldn't pass your stop if you're correct. If you're correct. Let's get into another quote. I like that. That's nice. Let's get into something else. Michael Marcus, which you guys know, he's one of the original turtle traders. He was taught by the original. He was with the original turtle traders, one of the best traders in the world. I think I told you guys he turned an investment from 30,000 into roughly 80 million. Okay. Michael Marcus taught me one other thing. So here it is. He's telling you he was taught by Michael Marcus. He was taught by one of the original trend followers. That's important. Michael Marcus taught me one other thing that is absolutely critical. You have to be willing to make mistakes regularly. There is nothing wrong with it. Michael taught me about making your best judgment being wrong, making your next best judgment being wrong, making your third best judgment, and then doubling your money. Remember the last show I showed you guys my 10 trades. Highest winner for 585, another winner for 65, another winner for 25, and then some other losers for the highest winner in there was 50, and then another few like 4 or 5 other small losers. So those losers. So this just goes to show you that even if you're wrong 7%, even if you're wrong 70% of the time, you can still make money. You should still be able to make money. And you should not get bent out of shape if you're wrong and you're not like always right, like a lot of traders say on the market, like they're always right. That's not true. You don't have to be always correct to make a lot of money. You just have to keep your risks small and let your winners outweigh your losers. Okay. And last quote from Bruce Kovner: risk management is the most important thing to be well understood. Risk management is the most important thing to be well understood. Another thing from this brings me to a point was from Larry Hyde. He said you can't gamble if you don't have any chips. If you lose all your chips, you can't bet. So don't lose all your chips. You have to keep your chips, which is risk management. It's not always about how many home runs you can hit. It's about what capital you can protect. And in this market time, you should be protecting your capital. Okay? You should be trading from a risk management aspect. Okay? Risk management is the most important thing to be well understood. Undertrade is my second piece of advice. Whatever you think your position ought to be, cut it at least in half. So that's another defensive trading tool to keep in mind and to use. Risk management and undertrading. Undertrading means not having too many positions open at one time from a trend following aspect, from a Bruce Kovner aspect. Okay? Not having too many positions open at one time. And in this case, when he's specifically talking about, when he says undertrading, he's talking about not having too big a position, not overtrading. Overtrading is having too big a position. In this case, and this is what he's talking about, there's different ways of undertrading and overtrading. You can overtrade by taking too many positions at one time. You can overtrade by taking too large position, in this case, which is what he's talking about. Okay? And you can overtrade by just trading too damn much. And you can overtrade by having too much damn risk open. You can overtrade by having too much of your damn account exposed at one time. That's overtrading. Undertrading is something similar to what I do. I only take about 4 or 5 trades a week, and I might only take those if I get stopped out somewhere, or if the market is telling me to take this open long. So with that being said, let's get into the trend picture. And talking about the market forcing me to take open longs, the market forced me to take an open long on XENE, on XENE. Okay? Because it kept setting higher highs and higher lows, and I knew I was already aware of this stock from previously. Okay, so let's get into the trend picture. With that being said, that beautiful stuff from Bruce Kovner. So under trade. So under trade, don't take very, very large positions, especially in this market time. Not take very large positions. Okay? Under trade. Don't trade too much. Alright? So here it is with XENE. Okay? XENE, and I remember this stock from earlier this year. I told you guys when I absolutely loved the pattern. I just fell in love with the angles that were on this thing. But I saw it back here around $4, and it just continues to be a beast. And I kind of figured that it would come test this areas here, and I was wondering if it was going to test these areas. So it has. It came back to test all the way back to these areas. Like TNDM, it slid all the way down and started rounding here at the bottom. So we're watching XENE, and I took a long here. I've got an open long on XENE. Okay, and I took it around 850. Okay, breaking out of this little space here, and then it went all the way up to 11, and then came back down on 20. So this has more upside on it. This might be, remember I said we're looking for our next home run. This could be the one, depicting off the upside it has on the chart. Okay. So we're long at 850 on XENE. We'll see where this one goes. This could be the next home run. If it does like some of the other stocks, comes here, passes these levels, which it's already past this level, and it's already broken through this and this. Major resistance, broken right through major resistance levels, so this thing could possibly continue. So watch this thing this week for continuation. XENE. And if you're taking a long on it now, you could take a long at 920, and I'd stop myself out technically below inside of this candle, because it shouldn't start closing too far into itself. Okay? Shouldn't start closing too far into itself. So remember, I told you guys, let's take a stop here at 845. Let's take a stop here at 845, okay? So there's XENE. Let's look at SSW. Alright, let's take a look at SSW. Green day on SSW opened at 980, closed at 1018. So green day on SSW, same stock we've been looking at. Alright. And we like it because it's continuing. Remember, it broke out of these levels here. It's broken out of these levels, and we're just watching it for continuation now. A lot of upside on it if it starts to round and continue. All right. But it's already been setting some higher highs, and we've been watching it. Okay. We're watching this move here, which is where some of my best moves have occurred from this type of pattern that doesn't really have a name for me besides higher highs and higher lows. This is a lot how I make a lot of my entries on stocks that look like this at this 2 o'clock degree angle. Matter of fact, just be technically speaking, this is one of the best patterns that are working right now. This sort of 2 o'clock angle that's just riding on top of each other, setting higher highs and higher lows. Consistently closing, closing here, opening here, closing. Opening here, closing. Opening here, closing. Opening here. Look at that. Just consistency in price action. This is what I mean when I say this is what this show is based on, you guys. We like to base our trend following on consistent stocks that have showing consistency and price action. This is what I mean by consistency and price action. Okay? Consistent closes higher than the next day. Consistent closes, okay? Opening here and closing, little pullback, which is what you need. You need that pullback. But consistent higher highs and lows here. Consistent higher highs and lows here. From, frankly, breaking out of 914 to where we are now, I think there's some more room on this. So SSW to continue those higher highs and lows. And if you're looking for a level on it, let's just see. It should hold this $10. See, now we're at a good, perfect spot here. We got a nice entry, something nice to base it off of. Buffer it out below this last little move here because it might try to retest this. So 990, 30-cent stop on that. Probably get you $3 or $4. But we'll see if SSW can turn into the next home run. YEXT. YEXT. Alright. Remember what I told you guys. Whenever a stock does this, it gaps up on itself, moves, and hold these prices, this is always, watch a stock that does that. That's a signal of strength. A stock that's able to gap up, digest those prices, and hold those prices, okay? And remember what I showed you guys on YEXT? I think it was it was last week before we closed. So I said this thing rounds, sets higher highs, rounds, sets higher highs, rounds, sets higher highs, rounds, and sets higher highs. Okay, higher highs, higher highs here, all the way up here. We're getting this rounding activity. So look for this thing to set a higher high this week above $20. Look for this thing to possibly get into $20 this week. Okay, and sometimes when a stock gets into that $20 range, it kind of decides whether it's going to really move past 20 or if it's going to kind of stagnate itself inside of that $20 range. So watch YEXT for continuation this week to break out above 20. I'd like to just set a buy stop at 1990 and into 20. Okay, to catch that move going upwards. All right. TNDM, I showed you guys this. This was our last home run. This is one of the bigger home runs we had here, but it's sitting inside this area. So let's just watch and see. But it's very it's outside of its normal trending behavior now because it only used to trend up, pull back, trend up, pull back. So now it's trended up and it's kind of having these lower lows. If you see them here sloping, these lower lows, still holding this level, but not as consistent as it was before. Just not as consistent as it was before. All right, by now the stock would have set another higher high and have broken out and continued this sort of move here. You see how the moving average is kind of bending over here to the side? All right. And we're trading below it. See how we're trading below this moving average? Well, we didn't do a lot of trading below that moving average in this last runs. See, we did a little bit here, but definitely came out above the moving average, and we were just bouncing off of it. Kind of, remember I told you guys that Patrick Swayze grinding the 50-day moving average, dirty dancing on that 20-day moving average, and now we've slumped below it. So I don't know what's going to happen with TNDM. It might start setting lower lows, or it might decide to jump back above this 20-day moving average. So watch TNDM this week, okay? Let's take a look at HEAR, one of the better stocks from our home runs that are holding up better. Actually, it looks kind of like TNDM, so a lot of action here. All right, gapping up in price and then setting higher highs, but now we're not setting higher highs. We're actually setting the slope of lower lows and lower lows. This is when I start. Everyone asks me when I start taking. First off, once we set into a really high price like this and we can't hold it, okay, and we chop around and we sit on a support level like this, and then we break below that, that's when I start taking portions of my position out. So I don't have a very large position in TNDM, I don't have a very large position in HEAR, and I don't have a very large position in INTELSAT, because they're doing this. They're outside of the normal spectrum now, okay? They're outside of their normal movement, technically speaking, like Bruce Kovner said. When they start getting outside of their normal technical barriers, that's when you start setting your stops. Okay, so we're gonna keep looking for the home runs. We're gonna keep trading them. All right, I'm sure one of these will show up. XENE is looking really well, and we'll see some other ones, and we'll keep going down the list. But I think we're gonna hit a home run here, and we'll just keep trading. So, all right. So here's INTELSAT. It looks like HEAR, and it looks like TNDM. Very huge uptrend, and then just sideways trading now. Sideways trading. So watch INTELSAT. possibly to hold these levels here inside of 16 and maybe start setting higher highs again over 18 and then 19 and then maybe 20. So watch INTELSAT. CASI, I have a long, open long here. Very wonderful stock. I opened long on CASI. All right, I have an open long on YEXT. I have an open long on XENE, YEXT, CASI, FNKO, ENPH, CYRX. Those are my open longs. So this is CASI. I have an open long here, and I traded this thing very well. A lot of the people in my group were surprised to see it back, and I said, yeah, it's back. So remember what I told you guys about resistance, support, and resistance levels? So depicting on market behavior this week, we might get a candle, a large candle, since we stopped at this resistance level. So awkward, right? What a coincidence that we stopped right here. So look for this thing to break out of this level here. Look for this thing to break out of this level. And what if it does, you may see a major candle out, a candle breaking out of here. A lot of price action, a lot of breakout buyers may just push price through here, okay? Because this is a very good stock, very nice uptrend here, very nice stock, very nice uptrend. So this may be where we start to get this uptrend back intact, because it does look a little sloppy here, and it looked really well here. It looks really, really good here. And then now it just kind of looks sloppy, but this may be the point where this chart starts to clean itself up when it breaks out of this level. So watch the breakout above this and just watch for this thing to continue. That's a good stock right there. See, watch this breakout level this week, guys. Definitely. Definitely. So you can set you a buy stop at 840 and 850 to make sure if this move pops out, you're inside of it. You can set a buy stop at 850 on CASI if you're barely getting into that move, okay? WWE had a red day on Friday, but I know, even though this had a red day, that this is going to be a very nice stock, okay? And it still kind of continued this little higher high thing up here, okay? Still set another higher high, but came down on itself, but it still set this movement to continue. It's still keeping this higher highs intact. Although it opened here, okay, and closed, let's see, it opened at 74.86. So it opened up here, 74.86, and then closed down on itself. So watch for this thing to close green this week coming up, and watch for some continuation on WWE. So you can take an entry now at 72.80, 82, and then set your stop below it here at 71, or even this wick here, 69. But I like a stop inside of this area here, 70 flat, 69.95. Okay, WWE looking wonderful. Let's look at FNKO. Beautiful stock right now. This could be the next home run. You never know. We just take entries on a few. We take entries on David Harding said you trade 100 different markets and you weigh them all the same. So we're going to buy 100 stocks and trade them all very similarly, and hopefully they all, which ones are the losers, we'll cut them, and the ones that are going to be winners, we'll make sure we have enough weight to they'll actually be home runs, okay? Because some of these will continue. Some of these definitely will continue. All 10 of these stocks are not going to shit on themselves. Okay, so there's going to be a few of these winners, and out of those few winners, that we'll make sure that we trade them correctly, that they have enough weight on them when they start running, that will cut the little losers for small losses, and the winners that are running will have that they'll actually pay for themselves, and that's a fact, that's a guarantee. I showed you guys that on my last show, I think, when I showed you my personal P&L of some of my wins and losses on a 10 trade scale. I had a win for $585, and my biggest loss was $50. Okay. Okay. So I like FNKO to continue this week. Wow, what a monster! This is my favorite pattern. It's just in my opinion, it's just a 2 o'clock. It's just a 2 o'clock trajectory showing strength, consistent higher highs and lows. This is all I need in my life to trade right here. This is all I need. This is my favorite type of deal here. This structure here, has been more successful to me in my time than I don't know what to know what to say. This little simple pattern here of just higher highs and lows. No rocket science, no head and shoulders, no rocket science. Just see the wave, get on your surfboard and ride the wave. All right, surfing 101 on this one. Same exact pattern, guys. Look at this. Jump up here, pull back, jump up here, sharp pull back, and then continue. All right, so look at this. Jump up here, sharp pull back, and then continue. This portion of the chart and this portion of the chart look exactly the same. And this is what I go for in my trading. I see portions of the chart that look exactly the same, and I expect them to behave similar. Okay? So if I was watching this earlier, I would have said, oh, okay, this moved exactly the same here. As soon as this sets its new, starts setting this, let's take a long here at like this portion here. So we would have been getting long at $11.70, $12, and we would have been riding up in here. We would have been long already. So, and I wasn't watching the stock earlier in the year. I would have already taken a long, and this would be a current home run. So let's look at this one to continue FNKO for the rest of the year, for the rest of the month. All right, this is July. New month of July too, you guys. So I'm giving you guys some things we can look at starting July. That should be some things some stocks that we can depend on, so to speak, to start us off in July, start us green in July, and then we'll kind of carry it out and we'll adjust accordingly. So we're gonna ride the winners that are winners, as long as they're winners and they're not stopping us out and they're not reversing on themselves. We're gonna ride those winners. Like if say we were to ride this, it'd still be a winner. Okay, we're gonna ride these kind of winners and see where they lead us to, and we'll just adjust. We'll update the trend picture. We'll keep the winners in our portfolio. We'll have some weight on our winners, and then the losers, we'll just get rid of them. And then we'll just look for more winners and keep adding winners to our portfolio. Hopefully we have a portfolio of 100 winners or 20 winners and no losers, and then we don't have to do anything for the rest of, remember the last quote I showed you guys from I think it was Druckenmiller, who said he doesn't do anything if trends are going his way. No, it was Bruce. It was Druckenmiller. I think it was Druckenmiller or Bruce Kovner, one of those gentlemen. But he said if trends are working in his favor, he doesn't do anything. He just sits there and enjoys them. He enjoys the day. He enjoys not having to overtrade. Enjoys not having to whipsaw himself. All right, that's the whole moral of this thing. If you were to buy this FNKO and trade it, you'd just be enjoying the ride. You wouldn't be buying in and out and selling and doing all the other stuff. You'd just be enjoying a ride from $7.50 to freaking $12.50, $12.55 right now. So that's the whole basis of this. That's what we're doing. We're trying to find the winners that we can buy them, and we don't have to overtrade them. They'll just be their own winners. They will produce for themselves. It's like planting a seed. It's like planting watermelons, planting fruits. You plant your seed and you just water it. Then you come out every day and you water it and you just watch it grow. That's what these trends are. We're like master planters, you guys. We want a good trend follower is like a master planter. He plants 100. He's a master gardener. He plants makes a beautiful garden from scratch. He gets a whole bunch of trends, puts them in his portfolio, and he watches the winners grow. Okay, he waters them, and that's you're watering these trends is the basic everyday watching what they're doing. That's watering them. Letting them grow is when they're growing on their own. Okay, you don't do anything. You just come out and pull the dying plants and get rid of them, and just keep making your winners, your growing plants. You keep watering them and making sure they're healthy and strong. Okay, FNKO. Let's go to club. You guys know I'll get carried away and I'll be here all night. And you'll be like, oh, God, I got to go, Tyson. Sorry to cut your video off. So I'm not going to make you guys cut my video off. I'm going to cut my own video off. Anyways, here goes. Remember I just showed you guys on the last stock. I think it was FNKO or WWE, something, one of those stocks. But what I say, this 2 o'clock trajectory here is my best pattern. This is I don't need I don't need 100. I don't need 100 signals to line up for me to make a trade. If I had to wait for 100 things to line up for me to make a trade, I'd never make a trade. I'd be waiting. I'd be sitting on my hands the whole year because I'd be waiting for. I'd be like, oh, I need 100 things to cross up and line up before I make this trade. So I haven't made any trades yet. I'm still waiting for 100 things to line up. You're like, you'll be waiting all year. So this is what I like to. This is my pattern. I don't need all that. I just need consistent higher highs and lows, and I will just ride them out. Look at this. This is trend following 101 in my opinion. Takes all the thinking out of. And this is, we were talking about this on Stock Talk Live last night. It's like, a lot of people want to know what's this process, what's this, forget all that. Just stick to one process. It's very simple. You shouldn't be asking about, what about this crossing? What about that? All that's simple. Now it's just perfecting. Now it's just letting your craft pay for itself. Now you should be at the point where your trading is just letting your process do its work now. All the mischievousness and all the secret stuff you're looking for, you're done with all that. Now you're just letting your processes, your process speak for itself. Okay, so now you're just riding waves. And we're just riding waves, guys. That's all we're doing now. We already know about stops and all the little stuff like that. Now we're just looking to ride waves. Now we're professional surfers. Okay, so look at this. This is what I was telling you. This strength right here. Even look at the strength from back here on the chart. And then when you have it here and recent, it's no better than that. It shows you you're riding the right stock. If a stock was strong here, showing you a 2 o'clock trajectory of consistent higher highs and lows. And then you look back 2 months later or 2 months later, and the stock is still in the same structure. I mean, that's a no-brainer. That's obviously a winner. Look it. Very strong 2 o'clock structure here, and then just continues like a beast. Very strong 2 o'clock structure here. All right, continues like a beast, and then here it is again. So it's a no-brainer on club, guys. No-brainer here. Stop yourself out 380. Give yourself some buffer space. You can even go $4, 405. All right. Give yourself some buffer space. 405. I really don't. This stock doesn't pull back that much. Here goes one of the majorest pullbacks for continuation. So what was this? $11.50 to $11. 50-cent pullback. And then it just ravages on. So a 50-cent pullback is the normal pullback space. Technically speaking. You just heard that from Bruce Kovner. So give it some space. It's at $14.50 now. like I said, I like a 50-cent stop on here. But give it a little bit of space in case it gives this little wick thing it does down here. This little wick. This is like a little pop-out area. This is like a washout for the little, the guys that are trying to hold on to price. So give yourself a little space here. We know to give it a 50-cent stop, but give it a little space. All right. I like that club. Very, very nice stock right now. Very nice. CYRX. All right. Strength, consistency. That's what we look for. Consistency in price action. All right. We look for it to break out of. We look for 3 consistent sets of higher highs and lows. We look for it to be raising in volume. All right. We look for it to be above the 20-day moving average. Okay. Or at least grinding that 20-day moving average, Patrick Swayze style. All right. And we like for it to be breaking through resistance levels. I like to see a stock that showed me it's gonna, like, it broke out of this resistance level here. Broke out of this resistance level here. Look. Broke out of this resistance level here. From here. Crossed through here. Broke through this. Okay. Crossed through here. Kept crossing. Alright. Broke through that resistance level. Kept crossing. Came here. Broke through this resistance level from coming through here and here. Now look. Nothing holding this stock back now. If you set a buy stop over this to break out, see, when you got to watch stocks, you got to know what you're watching. When this stock broke out of this level here, buyers bought it, okay? Because it was breaking out of a resistance level. And then when you pan back out on the trend, it was obvious that it was breaking out of resistance level because it was obviously in an uptrend. Okay? It was obviously in an uptrend here. So, breaking out of this channel, you guys, this stock broke out of this channel. I like to see definitely where this is going to go. All right, so watch CYRX for continuation this week. Let me give you guys a stop level on it. 15. I like for it to turn old resistance into support. And if it can't, let's not do business. So, and this is one thing why you can't let stocks run away from you. You need to be there for the movement they're making. All right? You need to be present. Okay? So, but anyways, man, look at this thing. Just wonderful. Jesus. CYRX. Man, I love this thing for continuation. So let's stop ourselves out. Let's give ourselves some room below this giant candle here. 1530 for a stop on CYRX. But just watch when the market's open. Watch how that stock behaves. There might be some love there. ENPH. Jesus, Tyson, get it together. Get it together, Tyson. ENPH. You guys know this is a way, like, I look at stocks like this is the way, if you get it correct, moving on to the future, like you should be able to be decent enough to where you can make a living for yourself. You shouldn't have to have anyone pay your bills, or you shouldn't have to have a 9-to-5. Or this is kind of like when you advance and you get into your process and things work for you. You know, you should be able to pay for yourself off your trading techniques or off your trading process. Should be paying for itself if you're doing the correct things. And we're getting to that stage. I know I'm there just about at that stage, and a lot of other people should be getting there if you've been trading for 2, 3, 4, 5, 6, 7 years. Okay. So ENPH I like for continuation on this rounding bottom. All right. And I took my entry here on this thing because when I noticed it was rounding, I said, oh crap, we got a rounding bottom here. And I said it had a trend line, so to speak, back here in this time frame. I saw a trend line here. And I said, you know, that's the other thing I like too, guys. Trend lines, very easy for me to trade those. It makes trading very simple for me. Trend lines, you know, this little pattern here. When you look at the thing about rounding bottoms, when they should be rounding on like a 5-year, on a yearly time frame. But then when you pan into the yearly, you should see some structure, like a 2 o'clock type of structure on your rounding bottoms. Your rounding bottoms should be rounding on a yearly time basis. It should show a change in price sentiment in the long term. And then when you pan into the shorter term, your pattern should show strength because it's rounding. You know, prices are rounding from that long-term sentiment, from a downtrend to a, you know, in the short term to the long term. That long term is going to be an uptrend now. Okay, so when it made its bounce here, I made my entry and then I just rode it, and it toppled down on itself, so I stopped myself out below here. But I made my entry here and then rode this thing. So now I made a new entry when we broke above this. So now I'm just enjoying this move here. I'm just enjoying this rounding bottom. So like I told you guys, prices could have been anywhere. Prices could be trading sideways. They can be trading anywhere, but they still are rounding. So let's continue to sit inside. And look at this. Look how this last wick, because for it to round, of course, it's not going to go straight up. It's rounding, so it needs to set a higher high, step sideways a little bit, set a higher high, step sideways a little bit, set a higher high, step sideways a little bit, set a higher high, step side. That's what makes it. That's what makes the pattern round. Is it's setting a higher high. See, look at this one. This one was going. It was rounding, so it was rounding to the downside. So it was popping up, going down, popping up here, going down because it needed to round off. It was popping up, going down, popping up, going down. So this sentiment, this whole pattern has reversed. Instead of it popping up and going down, changing. You can just see sentiment pushing it, pushing it, pushing it, pushing it, sentiment, pushing it, sentiment. Okay, now sentiment is changing now. Sentiment's changing. We're rounding. We're not popping and dropping now. We're not popping and dropping now. Popping and dropping. Now the popping has stopped. We've rounded now. We found support. Now we're not popping and dropping. Now we're shooting. Now we're having uptrends, pullback, uptrend, pullback. Not uptrend, downtrend, uptrend, downtrend, uptrend, downtrend. Actual proceeding with this downtrend. No, we've changed the sentiment on that. Now we're on an uptrend, slight pullback. Uptrend, slight pullback. But the move is on an uptrend. Uptrend, slight pullback. Uptrend, slight pullback. Uptrend, slight pullback. Uptrend here, slight pullback. So, of course, this is going to be, we're going to get some green here and some pullback to the side. But uptrend here, pull back to the side. So watch this pattern. It's been continuing. We've watched it continue from here when we noticed it was rounding, and it's still rounding. All right? So those are the number 2 patterns that are working right now, okay? This rounding bottom I showed you right here. This rounding bottom on the 5-year time frame. This rounding bottom is working, and let me take you back to the other one that's working. I can show you this on 3 different stocks right now. See this 5-year time frame? See how it prices rounded on this time here? What am I telling you guys? Look at this. So we just went from the last rounding bottom I just showed you guys on ENPH, right? Look at Club now. Look at Club. What I just say about the 5-year time frame. 5-year time frame right here. What is Club doing? Rounding. Rounding, look, downtrend, slight uptrend, downtrend, slight uptrend, downtrend, slight uptrend. If you're a short seller, you on these pull-ups here, you are shorting these. You are shorting these. These pops. These are pops and drops. You're just looking for this pattern to continue itself down when you notice it's a downtrend. If I was a short seller, guys, I'd be short selling these from here all the way down to here. Same thing with my trend following. When I notice prices rounding, I get long as soon as I see them rounding. And then I might get long from here and ride it all the way to here. So I missed this round. I totally missed this. I might have been twiddling my thumbs. I might have been in la la land. See? This pattern matches itself perfectly. It matches itself here, and it matches itself here. My kids are going to learn this. They're going to learn this, whether they want to or not. They're going to learn this. My kids don't have a choice. They have to study stocks. It's like a chore for them, okay? They don't have a choice. They have to study stocks. It's like a chore. It's like, did you study your stocks today? It's like, yeah, really? Yeah, go study. You're not going to be part of this slavery system. You know, you can't do shit for yourself. You have to go have work for Mr. Man. We're not doing that. So we're starting early. Anyways, look at this. Rounding here on the 5-year, all right? This pattern exactly matches itself right here. All right? Rounding bottom 101. Beautiful move there on Club. So if it's breaking out of this level here, now that I pan out and I see this rounding, you could set you a buy stop at 15 or 14.7. What is this here? 14.90 and 50. So you need to just this needs to get over here. But it's already gotten over all of this already. It's gotten and knocked all these dominoes over, so to speak. What I like to call knocking dominoes over. It knocked this domino down when it first broke out of it. It knocked this domino down. It knocked this domino down. It knocked this domino down. Knocked that domino down. On the reversed side of the pattern, on the other reverse side of this rounding bottom, we knocked all these dominoes down, okay, by reversing in price. Jesus, this is wonderful. So, what I tell you guys, rounding bottoms are working right now. And this sort of pattern that I don't have a name for besides 2 o'clock trajectory. This 2 o'clock trajectory is working right now. This 2 o'clock, if you were looking at a clock, all right, and someone said it was 2, and you looked at the arm would be right freaking here, okay? Right freaking here. So the trajectory on here is 2 o'clock. If this trajectory doesn't change, I will not be selling. I'll be long here until 2020. Christmas time's gonna come, and then I'm gonna be doing my the Christmas, trend following. Hey, here's a trend following watch list for December 25th. And I'm gonna be like, well, this is still FNKO, and it's at $50 now. Okay, so as long as this thing's at 2 o'clock, it can be Christmas of later this year or Christmas of next year, and we'll still be long. All right, so I'm gonna close the show up. I've been here for a while, and I'll see you guys here in the middle of the week. Hold the winners. Ride the losers. Hold the winners, cut the losers. Listen to Bruce Kovner, okay? Under trade, manage that risk, all right? And I'll see you guys here in the middle of the week.